Hello, folks. Brandon Chapman with you today. It's a Monday video for TheoTRADE. It's, November 6th, 2023. Man, it's about to get cold here in Utah. but anyway, is it about to get cold in the market? We had a phenomenal week last week. I kind of set it up with last Monday's video. What happened was I saw strength in financial stocks on Monday and was the second best performing sector. And it really looked like we were setting up for this week to be the rally, or last week to be the rally in the Treasury market, that the Fed would come out relatively soft in its posture and its announcement on Wednesday. And while explicitly it wasn't necessarily a dovish statement, the interpretation was, and we got that short squeeze that I talked about on Monday in the bond market, and we're kind of peeling back on Friday from the highs, and today TLT finds itself down at 0.97% as the 10-year Treasury yield ticks up to 4.6%. That pivotal level at 5% is going to be a very critical point for the broader market. Either we continue to see very positive real yields in that the 10-year inflation expectations are all the way down here at around 2.4%, creating a significant positive real yield, which historically has not been good for market. So we're just trying to wait to see what is going to happen and what is going to be kind of a linchpin for the market for this next leg. And the question becomes, which stock is it going to be, or sectors? As we look at today's best performers, healthcare topped the list at 0.67%. It was technology that came off being slightly down at one point in the day to rallying near the high of the day, to lift the S&P up to 0.22%. Now, why in the world is the S&P so far up the list when over half the sectors are down today? It comes down to a handful of companies, all part of the XLK, and we're going to focus on one stock in particular, and that is Nvidia. So if you look at Nvidia, its performance today, it's up about 1.6%. It was the fourth best performer in the S&P today. And notice how utilities, as yields began to sell off a little bit, fell back from being mildly positive on the open, being towards the top of the leaderboard, along with staples and healthcare, ultimately succumbing to the pressure in the high yields and slipping, and staples finishing up minimally at 0.16%. Everyone wants to know at this point in time, is the market going to go higher? Or are we about to pull back here? You know, I think it's certainly likely we could pull back. There was a significant print last Thursday of over 1 million shares at, I forgot to put the price here, at 427.10. And that's a significant level. Could we get a pullback to that point? Yes. It's also possible that we have a pause here that refreshes to the upside and goes to our next major print that we had, 2 million shares on 9/12 of 447.18. This is a critical point. We could pull back from this level, which was probably the odds-on bet, and maybe form a higher low in here and then see where we go. But there is this kind of slim chance, when I say slim, maybe 30, 40%, that we actually start to break through and head higher. Now, part and parcel with that probably has to be some participation on the part of Treasury yields falling back here, not moving higher, maybe north of 4.7%. But there's some option activity we're going to look at in our video today. And looking at the leaderboard over here, seeing Nvidia really kind of being one of the tops on the list here, it just shows that there's a handful of companies, and at the top of that list is Nvidia, that's going to give us the direction or the next stage of the market. This is the stock likely we need to key off of. Now, what's leading me to this conclusion? Again, I'm articulating the fact that XLK is the best performer, and the best performer, in fact, let's look at, I have a list of the XLK top 10 holdings here. The best performer in technology was Nvidia, followed by Apple. Now, Apple's already had its earnings announcement. It got a little jump on Thursday, fell back a little on Friday. Now we're breaking out today. But the fact that Nvidia's top of the list here, and Nvidia has earnings coming up, not this week, but on the 21st of November, there is the potential again for a major break up or a major breakdown. So this is potential return, positive or negative, that could really push the market either higher or lower. and the growth in Nvidia and its presence in terms of its market cap in many of these ETFs will have an outsized impact across many parts of the market, including the S&P and also including technology and semiconductors. So as we bring up SMH today, SMH finished only up about 0.29%. Again, a key component certainly is Nvidia, right? The biggest component. So the point is semiconductors tends to be a leading industry within technology. Not showing a lot of leadership today, but if Nvidia starts to make a run, it should be able to carry an ETF like SMH. Another angle that we could take on this as well, SPHB. This is a high beta ETF. It finished down 1% today, okay, just under 1%. I like to draw a ratio of SPHB plus SPLV. And as you look at this, notice we had a nice little breakout for 2 days last week. I draw kind of a line and it shifted a little bit with today's data. The point being is that we've yet to see a breakout in high beta names against low volatility. Low volatility names are typically what? Staples, utilities, probably some healthcare in there as well. Point being is that low volatility, we're on the cusp now of seeing high beta names. So let's look at the top holdings of a couple of ETFs here that are of interest, okay? The first is the VanEck Semiconductor ETF. We scroll down here, and I was trying to get this to load, and it didn't earlier, so let me try it again. Keeps giving me that little shuffle here. It's trying to load. Let me reload the page and see if it works. But let's come back over here. This is SPHB. This is the high beta ETF. Notice the top holding here, right? It's Nvidia, Generac, AMD, which happens to be what? Another semiconductor company. And unfortunately, I cannot get this thing to load. I had it up on Google over here. I had it up, dang it. So I thought it would load. Maybe it's loaded. Maybe it hasn't. Let me try this again. Apologies, the website's currently unavailable, but here's the point. SMH, so a simple Google search here. Nvidia represents 19.64, according to Yahoo Finance, 19.64% of what? Of SMH. So we have we have Nvidia, a 19% representation of SMH. It's the top holding within SPHB. And look at what happened today. We're going to go to SOXL. Now, this is a double leveraged, actually, 3 times leveraged ETF. Sometimes you'll see SOXS. Sometimes you'll see SOXL on the option, kind of unusual option activity list that I create from a scan that I do. This is kind of an example of the scan right here, but and stuff that comes up. But the point is that today in SOXL, there was significant option activity. This is the long 3 times leverage ETF. And this was for a January expiration out here. And if we come out here, it's long the 31, short the 35, 10,000 contracts. And again, it puts in a perspective here, right? 30, 35. We're looking at a massive potential move here by when? By January. Is that likely? The answer is, of course, no. It's not likely it's going to get there. But is it possible, right? There are those that are taking this bet out here, whether it's a hedge or not. It's a trade that was put on with significant size, looking for a substantial upside in SOXL. Again, when we go back to SMH, the semiconductor ETF, what's the top holding? It's by and large, nearly 20% is Nvidia. The top performer today within technology, the top performer today, or mostly the top performer, one of the top performers within the S&P 100. As you'll see, it's the 4th best performer there. And again, one of the best performers within semiconductors as well. So today we saw leadership in Nvidia, and its representation in these funds certainly makes it a pivotal stock. Now, can it make a substantial run from here? We've had a phenomenal move off of the low at about 392 to today's close, 457. We're talking well over a 20, almost 30% move in Nvidia just in the last 5 sessions. off of the lows. It seems unlikely we could double that up again and go to 503 from this level, 510, 520, 550 in Nvidia. But the point is this, is that it's possible, right? May almost be necessary if the market is able to extend its move from its current level. Again, S&P was able to perform better than most of the sectors today precisely because of stocks like Nvidia, precisely because of stocks like Apple that were higher today. If you look at the other big seven, you got Microsoft up 1%. What about Amazon? Not a technology stock, but there is technology representation in the cloud, up 0.82% today. What about Meta? We're talking about the big seven. Meta was up today as well. So as you go through these big seven stocks, Google as well in this, up nearly almost 1% today too. It is these big names that are ultimately going to lead the way. And of course, the one I'm keying off right now is Nvidia as being the most important of those big seven to perform well in order for the market to go higher. And again, looking for semiconductors, SMH, to lead the way if it does. Now, I don't think that's the odds-on bet that Nvidia can double up its 30% move, nearly 30% move over the course of the last week. Again, expecting that would be highly unlikely or not as improbable, not probable, as probable. Man, I can't talk today. That's not 30% move. What is that? Sorry. Yeah. 70 points, 20% move. Sorry, we'll almost 20% move in the last few days. So the point being is, can it double that up? Maybe it can grind it out to 496. Why would I say grind it out? It's because of this. When we look at skew ticked higher yesterday on Friday to about 140. Now, what does that mean? It means that hedges, the last 3 sessions, we've seen an increased desire to hedge as the VIX itself was falling. The VIX today closed at virtually the same level as last Friday at around 15. I think it's probably going to be very difficult for the VIX to push all the way back to 13. But if we start to break this 15 level, again, something we could key off in terms of seeing the market push higher as we see VIX sellers come in, helping to boost prices in the near term. So again, we need VIX to probably break support here. We need 10-year Treasury, the yields to continue to fall, probably help precipitate this rally and keep pushing it on that razor's edge. But what's happening here is we look at the VIX 3M to VIX ratio. The forward look at volatility reached almost like 1.16 on Friday. And if we see any decline here in the VIX, we're probably going to see this push quickly back above 1.2, meaning the 3-month VIX might end up being very quickly 20% higher than the VIX. If we get up here, if we see that rally, that continued rally in those big seven, top of that list is Nvidia, we could see this push back up here and help provide that reset to the downside. The only problem with waiting for that to happen before you start to get maybe a little bit bearish or start to look for bearish opportunities is the fact that we may not get there in the near term. The realities of the market right now and where we stand at the moment, and I'm bringing up SPX, this is a very significant level up here as we approach 4,400. It is very, very possible that we could see those big seven names begin to pull back, that this might be that last gasp. But again, we're watching Nvidia specifically. There is room left in the tank, gas left in the tank to get back to the prior high, which may help it lead out over the last couple of days. So the market itself may not gain tremendous traction as long as the breadth of the market, with so many sectors that are down today, real estate being tops, this could put pressure and hold back the S&P as Nvidia and other big names begin to stretch back towards prior highs. But you can see where we currently stand right now in nosebleed territory. Skew is ramping up as hedges are being put on, hedging the downside potential in the market and taking advantage of this lower level in the VIX. Now, I mentioned real estate was the worst performer today. Let's take a look at IYR. You don't usually see as much in XLRE in terms of option activity, but today in IYR, there were several trades of interest. The first here on the 10 November expiration, 16,000 contracts down here, mostly bought. And again, where does 76 stand? It's in the middle of this range off of the low of about 73 up to the high of about 81. It's currently about the 2/3 retracement off of the high. As we look at the pricing right now, what could you put on for the downside? Well, 10 Nov with 4 days left is a little short. Let's see what else we got here. In January, you'll notice right here, the 76 strike being bought for January, okay? So again, we have more option activity here on the bearish side. In fact, if we look down here, 34,000 puts traded today, 3.2 times the average, 88% getting filled at the ask or above. So again, a very bearish day. And so we not only see short-dated potential gamma potential. Now, the gamma on an ETF isn't as significant, but is still in there. Plus, we have the money flow, a couple of bigger trades coming in looking at the downside in IYR. Let's take a look at this 15 December expiration and see what we could set up here. As we look at IYR, currently trading at about 79. What about a 78, 76? This is a spread I traded earlier today, buying the 78, selling the 76. I bought it for about 58 cents, currently trading for about 54. You could even inch it up to 79 right now. We're basically at the money. Could you buy a 79 and sell a 77, right? And maybe get it for about 80 cents? Let's check it out here. You could get it for about 68 cents. Sorry, 80 cents, 70 cents, what I meant to say. 68 cents for a 79.77. Break even is 78.32. Now think about that for a second, right? 78.32 is where? Very minimally below the current price. 77 is basically right here. If this thing were to pull back and test 75, you could probably pretty readily get about 70, 80% return on risk just testing maybe $76, $75 down here, retesting the prior low. If it does it quickly, let's say within the next week. Okay, so this is a reasonable setup right now to go bearish IYR. And in fact, you're also seeing some bearish activity in Lennar. This is a home builder. The liquidity side of it's not amazing in this stock, but even in Lennar today, which you'll see is that the 10 Nov expiration pretty decently out of the money. Again, this could be a hedge, but who cares? Buying the 115, selling the 108. Are we looking for that significant downside here? Could it happen in a week? Absolutely it could. In 4 days? Yes. Is it likely? No. Probably better to trade a little bit more time and give yourself more opportunity. But notice how it spreads out to $5. You could look at something like ITB if you're wanting to tackle REITs or home builders off of this level for a 15 DC expiration. You know, you could buy an 80, which is about 37 cents out of the money, buy an 80 and sell what? Sell a 78, may cost you about 75 cents. Not terribly priced there. The skew is going for you. And so it makes it a little bit cheaper. 75 is right here, right? 77 is right here. So again, you can play that downside in these kinds of spaces, starting to build a bearish position into the resistance here. Now, we got to look for bullish stuff, but right now, man, it's a bit tough. And like I said, the bullish activity did lean towards SOXL. SOXL. Again, I wouldn't necessarily encourage you to buy options on SOXL. You could use SMH, especially if you're doing a spread. You get dollar increments anyway, so why not trade SMH instead of SOXL? You don't get any additional leverage in SOXL. It's just a lower price, maybe some cheaper options if you're going long. Now let's talk about another area here, ARK. Now I talked about SPHB to SPLV ratio. That's my short squeeze indicator. It's on the cusp here of potentially breaking out. ARK Innovation ETF is one that saw significant bullish option activity on Friday. And a lot of these companies, you look at the top 10 holdings within that fund, stuff like Roku, right? Stuff that's broken out pretty significantly in the last week. Many of these companies have very high short interest. Another one's like Coinbase, for example. So a lot of these companies have high short interest. Again, that's why I call it a short squeeze indicator in terms of SPHB, but ARK has the same potential, just like we saw back here in May. If we see that squeeze like we track from May to July, ARK should perform relatively well. Now, those 2 days we had here were significant, and we have not seen anything like that Even back here, the squeeze in middle, early July could not parallel this. Maybe if we go back to November 9th, you get a sense of how extreme this move is. But ARK today, again, huge move, pulling back, but more bullish option activity coming into ARK for a 10 Nov expiration out here at the 41.50 strike. So again, maintaining that bullish edge. Even Lilly saw some bullish option activity, a 600 to 610 strike, a vertical for 10 Nov. So we're trying to squeeze it. Again, keying off Nvidia, but the point is it's not certain. It's not absolutely for certain that that's necessarily where we're going, but it's certainly possible. If we look on the bearish side of things today, PayPal, after a huge boost last week, nice engulfing formation today. Stock finished down 2.64%. Reasonable. We could retest low on PayPal. This was actually an 8 December expiration. So let's come out here, 8D, 6,000 contracts mostly bought on PayPal here. Again, you could go 30 days. You could stretch it to 39. It's 250 increments, or you could even go out to 22 December, and you've got dollar wide spreads out here. Again, the skew's favorable for doing an out of the money spread here. You could probably get for something for about 70 cents. You could buy the 54 and sell the 52. And again, that would allow you to probably close it if we retest our lows, close it early, probably 70, 80% return on risk. So folks, there's a lot of stuff setting up right now, even in XLE to the downside as well. Looking at kind of retesting our lows in XLE. The trading XLE was a March 80, so a little bit longer dated, looking at a little lower strike, but look at the product depth here. The CL is flattening significantly from where we were in September. We're seeing basically that shortage coming off the table as economic weakness is maybe indicating that we may have an increased production, that we may not have the shortage in oil we were previously expecting and pricing into the futures market. This may help create downside. So while oil was higher today, energy stocks were down. You could look at an 86, kind of 84 here spread, just looking for downside in XLE in the short term. Folks, got to wrap it up there. We'll catch you back next week on the video. You have a great